Welcome. Merrill Chandler here at Get Fundable podcast. I've got an amazing guest. We've got an amazing new studio. We are set live to get back in play week after week. We'll be doing more and more podcasts and get you up to date with all things fundability. So my guest today is Dan Thompson. Now, a little bit of history on Mr. Thompson. We are when we come back, I'm going to create an awesome opportunity for all of our viewers, all of our listeners to come to understand how to leverage life insurance.
In the constantly changing world of fundability, the big question is this: how are entrepreneurs and real estate investors like us, ones who want to grow our businesses and who are tired of paying for really expensive alternative lending, how do we tap into the most inexpensive money available and do it without the hassle of typical borrowing? That is the question, and this podcast will give you the answers. Welcome to the Get Fundable podcast with your host, Merrill Chandler.
Welcome, Dan. How are you? Welcome to the studio. Welcome to the Fundability podcast. How are you?
Oh, thanks for having me. And I'm doing great. And it's good to see you again. It's been a while.
Okay, I got to tell everybody. So first of all, Danny and I go way back. His name is Dan Thompson. We were high school friends, and he won. At high school, he won because he got...
Depends on what part of high school you're talking about.
Right? So we go way back, right? And we have a shared cultural background. We have a shared... we're both in California and went to the same high school in Modesto, California. I blazed out to Utah. You went to Idaho, right?
Yeah, I stayed in California quite a while, but then moved to Idaho. Yep.
Moved to Idaho. So he and I reconnected at a reunion a few years ago, and we hadn't seen each other for like 20 or 30 years before that. And so we're literally refriended after meeting each other again at a high school reunion. So come to find out, I know how to get money and he knows how to leverage life insurance policies that you buy with the money I get. So that's what we're talking about today.
Man, you're throwing out all these years. You're kind of aging us.
Well,
I know we got some gray. And
we got a little bit going on here, right? Could you imagine us in high school? He did get the girl that I was interested in, Diana Boyd. Bless her heart, man. Bless your heart. If you're watching, Diana, hi. Anyway,
Hey,
neither one of us are with her, so
yeah.
There's that. But in high school, she was an amazing part of our group of friends that we were pretty tight, right? All went to the same seminary, we went to the same religious classes, etc. So it was a lot of fun.
It was a great place to grow up.
Oh,
loved
truly.
every minute. Have no regrets.
Right.
It was fun.
Truly. So to the task at hand. So Dan, give us an overview of, because when I asked you before we started, said, how do I introduce this? You said leveraging life insurance. So what does that mean?
Yeah. So maybe I should backtrack a little bit and tell you how it even evolved.
How you came to it?
Yeah. So actually, when we were 15 years old, I was riding around in the back seat of my dad's car, and he was with a friend of his. My parents never really made a lot of money. We just kind of struggled along. But one of his friends was very wealthy, and he's long gone. His name was Dave Hanna. You might remember him.
Whoa, that's a blast from the past.
Well, he was old when we were young.
When we knew.
So he'd probably be 130 now or something like that.
Right.
Anyway, he told my dad that he made $30,000 that month in the stock market. Now, I'm working as a landscaper and a framer, making $250 an hour. My mind starts calculating.
This is 77, 78, 79.
Yeah. I'm like, that would take me 2.5 years to make that much. He did it in 30 days. And he said he did it in the stock market. So really from that day on, since I was 15, I was going to be a stockbroker. And that's what I did. I pursued. I don't know if you remember or not, but school and me weren't the best of friends.
Fair.
So it was a little bit of a difficult journey, but finally a company hired me. And so I went for it. I ended up opening up 5 offices, having 60 reps. I was one of the number
Damn.
1 producers and all this stuff.
Yeah, ambition was never your problem.
No,
It was yeah.
Just getting there.
You're right.
So, but after the dot-com boom and bust, I just said, man, I got to find a better way. This is just too difficult. You're making money 4, 5, 7 years in a row, and then you lose half of it.
Yeah.
You just keep riding this Wall Street roller coaster. So I really had to find a better way. What I did in about 2000 and 2001, I just looked for everything. And I ran across this concept. Some people called it infinite banking. And it was a good start. And it was at least something to learn about. And the guy who kind of wrote the book on it, I hung around with him for a few years. But what I realized is that they were missing the boat in one aspect. They were building these life insurance policies and then taking loans to go buy stuff, cars, boats, a vacation, just wasted stuff.
So let me get this right. So instead of going deeper into investing, they would use a life insurance to just use their cash, just buy more stuff.
They called it becoming your own bank, anything of that nature, with the idea that if you just save the interest you were paying to a bank, you'd make a lot of money over your lifetime. And I started running the numbers. I'm like, oh, okay, I have to buy 800 cars and pay myself back 20, and it just didn't.
Well, we won't
out.
even talk about your current car collection.
Yeah, well, I do have a little bit of a problem there.
I know. Right.
So, but they're all marketing.
Yes.
So, in fact, you have to remind me. I got a QR code on the back of my cars, and I'll tell you why in a minute. But anyway.
Oh, that's awesome.
Yeah.
Hold it, because I bought my car. I bought my car in the company, but I don't have a QR code for somebody to be able to. Remember this, folks. Remember this, folks. Okay.
Well, the QR code takes you to my website where I have a video where I show them how you can buy these cars using the IRS's money. And so anyway,
perfect.
As we go along, I start understanding that leveraging life insurance is probably one of the most productive ways to build your wealth because it's a capital account that never depletes. So if I save money in a bank, let's say, and then I go buy a piece of property, I got to deplete the bank.
Yeah, you empty the bank account to buy the asset. Even if it appreciates, you still don't have the
exactly.
account. Okay.
Whereas if I use a life insurance policy, my money's always growing and compounding no matter what. And I just use a line of credit or a loan against the policy to go get the real estate or whatever.
But the capital itself is still appreciating inside of the insurance policy.
Constant compounding never stops. And I still get to go buy the other asset. So just to give you a couple examples, this year I bought a student housing complex at Texas A&M. And
well, there's that.
So I used my life insurance policy to buy the land, and then we're looking for funding
that's weird. Yeah. I know a guy.
Yeah. To not only build it for obviously, but then some long-term financing as well. So where I think you and I have some synergies is my clients are always looking for opportunities. Having capital brings those opportunities, and sometimes what's in the policy may not be quite enough, so they're looking.
We need to buy more policy.
Yeah, either more policy and or just having access to additional capital to take advantage of the asset or the opportunity. Bottom line for us is we want assets that cash flow, produce income, and best of all, if we can, get them to where they give us some tax advantages.
Right.
And again, where your funding potentially could help. One of the best investments we found over the years is equipment
leasing.
Equipment leasing is a great way to get a massive tax deduction. It's a real simple 179 deduction, but we have a company that manages all the equipment, runs all the distributions, the income, the maintenance, the insurance, and it's like Airbnb for equipment.
Okay, so I buy a piece of equipment, and what can be classified as equipment?
So for these guys anyway, I call it BDE, big dumb equipment.
Okay, so we're talking about
heisters and forklifts and truss.
So you're saying I buy it, but then I provide this leasing company the asset to use and rent out or otherwise? Is this a big equipment rental outfit?
Exactly. It's a huge equipment rental outfit.
Nice.
And it's an Airbnb of equipment, right?
Okay.
So I own it. It's my LLC. Everything's mine. And then I get the depreciation off that equipment. And so as an example, let's just use some recent ones. A guy will have $100,000. We'll use that, get some funding, get $1 million worth of equipment. This year, you get an 80% tax deduction. So that's an $800,000 tax deduction in his pocket this year, which can go against ordinary income and capital gains. And so, literally, for most people, we can wipe out their tax liability. Then they take what they would normally give to the IRS, shove it back into life insurance policies, use it again, and just rinse and repeat.
Got it. All right. So this is awesome. All right. So what I want our tribe to recognize, you guys, is that capital is just the grease in the skids, right? It makes things easier, faster, and if you do it right, better. So what we're discussing in this with Dan is that how do we use the money you're already acquiring? You're already becoming fundable. Your business is becoming fundable. You're using your QFE to establish the right kind of framework to be attractive to banks. And then we come back now to Dan. And what would, if I had $50,000, $100,000, $200,000, $500,000 in bank loans, because that money costs me, right? So in your program, how would I use $500,000 that's costing me 8% most effectively so that I can have short-term wins and long-term wins?
So I would probably look to the equipment leasing first, because that's an easy fix. It's a quick fix. So you could take those funds, get the equipment. That's going to give you a massive tax deduction. Now, the money that you would have normally sent to the IRS, you can turn around now and fund a policy. Now that policy is building up, and next year you can now use your policy as leverage to get even more
borrow
equipment,
money, to
and just
borrow
keep
more money.
rinse and repeat.
Okay, so do I need to plan then to pay my 8 to 9% until it's tax time? And because the bank is going to require a payment, right? So so I just need to plan in my budgeting to make that payment, while in the background the tax deductions are going on. Or is there a way that I can leverage life insurance to lower the cost of this money?
So you can do two things. One is, if you're going to use the money directly, and let's say it's an 8% loan rate, you could capitalize it through the loan as well. In other words, if you have a $500,000, maybe you use $450 of it, use the other $50 for interest over the next couple of years while the tax deductions are coming in.
So you're saying only deploy 80-90% of it, save some of the disbursement to make the payments.
Yep.
And then leverage the rest of it inside of the policy or leasing.
Yeah. And as you get your distributions and or tax savings, you can then either pay back the loan or just go get more.
Right.
Now, here's the other thing. You're going to get about a 15% distribution off of the equipment as well. So that,
you mean my share of the rental income?
Yep. Yeah, which usually will offset your loan as well. So that's number payment. 2.
Okay.
Is
you heard that, right? We want to make sure that we can offset our payments. Now, we need to save the money. So how often do these lease payments come in? The lease
every 30 days.
Oh, so yeah. So
just like a bank payment.
Now we call it a stipend, like in syndications, right? They pay a certain monthly amount after a certain period. So you're saying that I would get a payment, whether or not my equipment was being leased, I would get a payment of 15-ish% every single month. And if I do the math, which we need to do offline, we'll do that. We would be able to provide all of our clients to show how much they can use of the money borrowed versus how much they need to save to make up the difference in the leasing equipment payments. Is that typically, am I understanding that correctly?
Yeah, but if your borrow rate is 8 and you're getting a distribution of 15,
Oh,
you wouldn't
snap.
even have to capitalize anything for future interest payments.
Right.
And because they're going to start paying you 15% divided by 12 month one, every month you should have plenty to cover
to be able
your
to cover
interest.
the interest payment. You heard it here first. you heard it here first.
And then here's the best part: because you used your loan for a business or investment purpose, you should be able to deduct the 8% interest that you're paying.
We do get that, right?
So if you're in a 40% tax bracket, your net cost of money is now about 5.5.
Yeah.
And you're getting 15 from the distribution. You should have money to go to dinner.
Yeah. at least go to dinner.
Maybe a vacation or two.
So, where was this when all right. So tell me, let's go to, where was this when I had a big payout? So, we hadn't reconnected when it was time for I had a big payout a minute ago. And, so I invested it in all the things that I could have actually deployed it.
Leverage.
Where we could have cascaded it and then ultimately do the software development, because we've spent hundreds of thousands in our software development.
Oh, wow.
And it's killing it. It's
nice.
Probably New Year's, our fundability software is going nationwide.
That's awesome.
It just took me, but I did it the bad way. You guys, I did it the wrong way. And I spent my cash that way instead of buying. Now, what kind of so if I have 500 grand, do you have a list of equipment that needs to be purchased? Do I literally go over there and go, I'd like on line 14, I like that one, the big tires.
They actually do. They work with you directly and say, hey, in Florida, we need this equipment. So, okay, I'll buy it. And then it's rarely going to be in your neighborhood. It's probably not even going to be in your state.
Right.
But again, it's your LLC, it's your money, it's your equipment. You get the distribution for not only the bank payment, but also your share of the distribution. It's a pretty well run machine.
Right. So I get 80% the first year, which is how I stay out of Uncle Sam's pocket or put my money in his pocket. What do I do in year two? How does it split the rest of the depreciation, or am I just buying a new piece of equipment to get the same? So pretty soon I'm going to own my own equipment rental yard.
There you go. Well, no. So what'll happen is you'll get for most people, the remaining distribution still offsets, the remaining depreciation still offsets the distribution. So it should be a non-taxable event for you for 5 years. And then in 5 years, they're going to sell the equipment, rinse and repeat.
And so we need to get rid of the old equipment, buy new equipment, because
we've depreciated out.
Well, what's interesting is, and a little history, and Dan may remember this, but so my dad, we had same kind of raising. We were struggling when we were growing up. My dad, the retail store or chain closed down, and he had to go find a job, and he started managing an equipment rental yard. So I'm sitting here going,
you could have funded him.
The chickens come home to roost. I'm getting into the equipment rental business. Here we go. Dad, I got you. I got you. We will make this happen. So,
well, the other side of it is you'll most likely have more depreciation than you can use. So most of our clients are getting, let's just say $1 million worth of depreciation. They only need $400,000 or $500,000 this year to wipe out all their taxes. So you can carry that forward for years and years and years until you can use it all up.
So we get to keep rolling it forward until because it's always zero, and whatever we have left over, we can move to the next year.
Move it to the next year. So you should be able. A lot of our clients can go 10 years. They bought so much equipment, and they're doing it because the distribution's a nice distribution.
Right.
I mean, it's hard to find 15% that's going to be offset by depreciation to put in your pocket every month. It's a great retirement asset.
So give us an example of a piece of equipment, the amount of the monthly, the amount of the depreciation, and the amount of, and just pick one of your clients without using their name, or do, and then and just tell us how much comes in every month to them, and then how much they wrote off in that first year,
Okay.
etc.
I'll just use myself.
Okay.
All right.
Let's do
So
that.
I just got $2.7 million worth of equipment. I put 10%.
And what kinds of things did you
So
buy?
they're still picking the equipment for me.
Oh, nice.
So yeah, we're still on that. We're still right there. I put 275,000 in, and that will pay me. Let's see, roughly. Sorry, I should have had this in my head.
No worries.
45,000 a year, maybe 48,000 a year in income.
Okay, so that's 12 times. That's 4,000 a month.
Yep, about 4,000 a month in income.
But you only put in 275.
Yep.
How did you get 2.7 million in
bank financing?
Okay, so that's where
this is where funding can come in as well.
Okay.
If they like equipment and they can get us some good funding all day long.
Okay.
I would rather have access to capital through funding than have to go apply at a bank and start all over every 2 or 3 years when I buy more equipment.
So what we're saying here is if you had 2 to 5 banks that loved equipment financing, that would facilitate this process.
Easy. That would be the easiest process. I don't know what you're finding in your funding side of things, but banks have kind of tightened up when they're just getting harder and harder, even if you bring them a good product, a good deal. In fact, we like multifamily real estate as well. We've been falling back on either seller financing, assumable loans, or doing a big lease back, lease purchase, because banks don't want to. They're just
we've got one of the things that we use is commercial lending, which is
different world.
Yeah, a different world. It is prime plus 2.5 on some of these, so it's not horrible. A Fannie Freddie is is prime minus a half to 2 points, but it still beats the rent. It's still far less than the rents that would be in the property itself, right? Or that would deliver.
Oh yeah. No, so you can most multifamilies will pencil in at even a 10% financing rate,
right?
If you buy them right.
Yeah.
The student housing I was just talking about. We could probably pay 11-12%, and it'll still cash flow because
nicely.
It's just it's a good piece of property.
All right. So they're saying come in with what you have found is come in with 10%. So that's the 275 that you bring in. They pull in the 90%. You buy the equipment. You're getting $4,000 a month cash flow, which is definitely going to cover. I'll have to do the math, but I think that covers $4,000 a month covers the 1.7.
Oh yeah, easy.
Because it's what's the amortization? 10 years, 15 years.
10-year amortization, and then we usually pay them off and
sell
the equipment in 5 years.
5 years. Okay. Excellent. Okay, those are numbers that I can work. Those are numbers that I can work with. Now, so that's just leasing alone. How would we bring in the life insurance policy, and do you use IULs, whole life? What do you use?
So we usually do a blend of IUL and whole life. And the reason why you want the life insurance is because eventually you want that to be your capital account.
Right.
That 275,000, that's just my life insurance.
So you took a loan, which is subprime.
Subprime.
Yes, subprime loan against your life insurance.
Yep.
And then you're able to use that money as what you're weighing in on this deal.
Yep. Now I've got the deduction on the interest for the loan on the life insurance, but my policy's still growing because I never really touched my money.
Right. The principal is still accumulating, which doesn't. From what I've heard from others, I've studied a little bit, but I'm only a novice. Aren't you making quite a bit of return on the principal itself? Right.
So my return should be greater than my borrow rate. Number one, I get to deduct the interest that I'm paying, and then I've but what I really like about it more than anything is that it's just a rinse and repeat, because I'll take the distribution, put it
And put
back
it
into
back
the
into
policy, and then next year when I need more equipment, or 2 years from now, I can go again. But my return actually got better from using the policy. Let me say it like this:
please.
a 15% return distribution if I don't use my policy. Using my policy, that jumps up to about 18 and a half.
Because
So,
you're under prime.
and I got compounding over here.
Got it.
So I'm going to get a greater tax deduction, and I'm going to still have my money compounding. So where I would get and 15% is not a bad return, but
Yeah.
by simply running it through the policy first, that jumps up to 18.
Got it. Okay. So this is, okay. Good news. The longer we talk, the more I regret the decisions that I made in the past. Don't remember, I said I'm my own crash test dummy. You guys know through and through. I'm in credit, in building, in building. I'm my own crash test dummy. I learned the hard way. Let's make sure. So, how would someone get a hold of you? What's something that they could watch right now without committing themselves to talking to you or your team? What could they see a watch to be able to? We can put it in the show notes. But do you have
Sure.
some place that they can go to get an idea about and be, it's 10 o'clock at night, entrepreneurs, right? It's 10 o'clock at night, the kids are finally in bed and they're like, I want to watch this. Is there something we can watch?
Oh yeah. So I have a YouTube channel called Wise Money Tools.
Wise Money Tools. We'll put that in the show notes. Wise Money Tools.
I've got well over 600 videos.
Oh,
so
Jesus.
You can binge till the cows come home.
Okay. All right. Well, there's that.
And then on that, we usually have a link where people can download my newest book, complimentary.
Okay.
And in there we talk about time, compounding, leverage, and tax advantages. And that's the easiest way to build your wealth. The best return you can get and the easiest money you can make is just not having to pay taxes.
Right.
I mean,
that's a 30 to 40% return.
Just put that
right
in
there.
your pocket. And you don't even have to, then you can do very conservative things. You don't have to take a lot of risk. You don't have to roll the dice in the stock market. 401ks just aren't turning out like people thought they were going to.
Yeah.
As they say, that the chickens are coming home to roost now, and
truly.
it's just not happening.
Right.
So people are much better off
not paying Uncle Sam,
and then taking it into their own hands, having their own control. Your funding, I love it, just because if people have access to capital, they get to take advantage of opportunities that are out there. And those who don't have capital, they just sit there and go, how's that guy do it? How's that guy do it? It's just not that hard.
Yeah.
If you can grab some dough.
Yeah. And all right. So I like to end my interviews by, so I firmly believe in the school of hard knocks. I want to leverage that so my crew doesn't have to live from what I did, or I want them to be able to learn from what I did. What would you say is one of your greatest lessons, where you were your own crash test dummy, man? You just kept running into the wall until you learned something, but it changed your life when you learned the learning.
I think the first 15 years as a stockbroker, talk about knocking your head against the wall 50 times a day. But that was a great lesson, because it did push me into more predictable things. That has translated probably. I always say I cursed my kids with this entrepreneurial, never get a job, right? So none of my kids have ever had real jobs, but now they leverage their life insurance policies into businesses. So they buy businesses, just like I do equipment leasing, they buy businesses.
That's awesome.
Even one of my sons opened his own entrepreneurial school. So it's a private school. People pay him to
learn all the stuff you taught him.
Yeah.
Weird. Today we have a guest speaker. Our guest speaker is my father, Dan Thompson, who taught me everything I know and paid for my education and my room and board.
Yeah. I wish he thought I taught him everything he knew. How kids are, right? But no, there's so many ways to just pound your head. And I'll tell you what, I hate to say we got the secret sauce, like it's some magic. it's not magic, but I'm telling you, we got the secret sauce.
It is secret
It's
sauce.
not as easy. It's not as hard as people make it seem.
Okay, so what you're saying is the secret sauce, we actually know that it's ketchup and mayonnaise. And you blend those together and you got fry sauce and it's magic, right?
There you go.
But it is just ketchup and mayonnaise. You just got to put them together.
No,
right?
that's
the right
right.
way, right?
And that's why I wrote this book. It's called The 4 Keys to Building Wealth. When you put the ketchup, mayonnaise, and some mustard and some relish, you get time, compounding, leverage, and tax advantages. And man, you put those 4 together, you got yourself a winning combination to build your wealth.
Brilliant. Now, if some of my clients they're like done for you services, or they want coaching, or they want something. So we get your book. They love your book. They watch one YouTube video. They say, I want Dan on my team. Do you offer something where you coach people, or do you have group coaching, or kind of how does somebody actually work with you if you do that? Or are you past that? You said, I don't even do that anymore.
No, well,
I make too much money on my own, playa.
No, I certainly do. We do have about 50 advisors across the country that work with us. We have a staff of, 45 or 50 right in Boise. We white glove, handhold all through the process. Our job is first and foremost to build and design those life insurance policies as productively as we possibly can, stay within the IRS guidelines, get those funded. Then we start leveraging into equipment, e-commerce, your own business. By the way, these are great things to have for just your own business, just a capital management account.
This is where I'm sitting here going, yeah, my payout would have been, I could be living off my payout and still investing in my software.
Yeah. Oh, yeah.
Don't do what I did. Don't do what I did.
Double, triple, quadruple dip. Use the same dollar to do 2, 3, 4 things for you.
Yeah.
Take advantage of not paying taxes, and wow, you'd be surprised.
So how would somebody get a hold of you for your coaching, or for this customized, these plan builds and everything?
Yeah, Dan at wisemoneytools.com is my email. And again, if you go to the YouTube, TikTok, Facebook, Twitter, we're there. We're on everywhere you can go, and just look up Wise Money Dan on some, or Wise Money Tools.
Wise Money Tools, Wise Money Dan, and Dan at wisemoneytools.com.
Boom.
Well,
can't miss
you guys, he just gave you his personal email. So there's that. Thank you.
Yeah.
Dan, seriously, man. By the way, Boise, right?
Boise, yeah.
He's down from Boise on other business, but we decided to belts and suspenders, put them together. So thank you for coming by the actual studio instead of doing this over. So many of my podcasts are online, right? But I'm glad to have you in the studio.
Well, it's been fun, and you're going to have to now join me on my YouTube, and we'll just do a double do and a double share.
I love it. You guys, thank you very much. All right. Thank you for joining us on the Get Fundable podcast. Love that you joined. Make sure that you check out Wise Money Tools. All of the resources, they'll be in the show notes. You guys, getting the money has been the hard part. You guys know that as a client, a student of Get Fundable, you now have access to money. Let's 2x it, 3x it, 4x it, and use that same money in multiple ways. Find out how. Go check out Dan's stuff. It's a pleasure to be here, you guys. I love you. Make sure that we take advantage. Do not be your own crash test dummy. And please don't take any liquidity events and get yourself and bury yourself and spend your cash. Do not spend your cash. This is Merrill, Chandler. Thank you for joining us. You can have an amazing rest of your day.
Thank you for listening to the Get Fundable podcast. Please leave comments, because Merrill would love to read about your aha moments from this episode. And be sure to visit getfundable.com to read our blog, get important links, join our community, and much, much more, like ordering Merrill's tell-all book that is changing the world, The New F Word. And you got to tell your friends about this podcast, because we want them to get fundable too.